If you're new to investing and you're wondering why the stock market took such a big hit yesterday, it has a lot to do with something called a carry trade. Not that carry. All you gotta do is Google carry trade and it's article after article after article, and come on TikTok and there's a lot of videos, and frankly, they're not all doing the best job explaining it, so here's what's gonna happen. You're gonna smash that follow and I'm gonna explain what a carry trade is. You ready? Let's go. Japan has had a really low or near zero or even sometimes negative interest rate to try to spur growth and spur on the economy. Carry trade would typically mean that you borrow a currency, in this case the yen, at a very low cost. You're assuming that it's going to remain cheap against the US dollar and for the Japanese interest rates to remain very low. Then take the money that you've borrowed and you invest it in US stocks and treasuries, things that have higher interest rates. And then you just pay back the very, very low loan. There's only one huge problem. Japan raised their interest rates, and when you do this, it tends to raise the value of your dollar or yen or currency. And so the yen surged against the US dollar. So how does all of that affect our stock market? Any trader or investor who's borrowed the yen to buy US investments, and some of them could be higher risk, scramble to dump those investments, that's why our stock market dropped, to pay back suddenly a higher interest rate loan. And when you factor in computer-based algorithmic trading that can look around and go, whoa, a lot of shares are being sold, thus triggering more selling, you get this kind of like cascading snowball effect where just more and more shares are being sold. Factor in everything else that's going on in the world today, throw in the dreaded R word for recession, and you could see how people would absolutely panic and lose their minds. But as long as you're a long-term investor, you remember that these things are temporary, and overall, big picture, markets have a 100% recovery rate. Don't worry, just take a deep breath, calm down. If you took advantage of yesterday to buy a little bit more, great. If you didn't, don't worry about it. Don't stress too much. Just stick with your plan. Hit that follow. Thanks for watching. See you later.